Joining me now is Douglas Eaton, President, CEO, and you might as well be a director.
Oh, I am.
Of Strategic Metals. Thanks for joining me on the morning drive, sir.
Thank you very much.
You want to give us a quick little overview of you and the company?
Sure. Okay, so as you said, my name is Doug Eaton. I'm the President CEO. I've been with Strategic pretty much since its inception. But before that, for many, many years, I worked in Yukon with the consulting firm of Archer Catherine Associates. In fact, I ran that firm for many years, 50 years with them, which is 50 wonderful years. And I'm using the knowledge that I learned during that time period to stock Strategic Metals with what I think are some exceptional mineral exploration properties. Most are in the Yukon, a few in northern BC, and just a couple in the Northwest Territories. We focus there because that's where our databases are, and that's where my knowledge is. We've managed over the last several years to accumulate an enormous property portfolio, just slightly under 100 active mineral claims now, plus a number of royalty interests. We've operated primarily as a project generator since the early 2000s, and I think quite successfully. We've managed to build our property portfolio, our royalty portfolio, and build up a large number of shares in other companies while always maintaining a healthy cash balance. So that's pretty much where we're starting from, and I'd love to explain some of the intricacies of the company to you in the next few minutes.
Absolutely. I think I'm just going to ask you a few capital markets questions here. So
sure.
What percentage of the company do you own at this point?
About 4 to 5%. I don't know the exact number, but it's in that range.
Okay. So you've obviously diluted yourself down over the years.
Actually, I'm still actively buy stock when I think the share price was ridiculously low. In fact, I was buying last fall. So it's not so much a question of dilution. I've never I'll use the word. I've never been greedy. I like to make sure that I've got lots of other investors there. But believe me, it's my main focus. It's where I spend most of my intellectual time.
Okay. And the company's got about 120 million shares fully diluted?
Fully diluted, 110 on an outstanding basis. All the rest are options. There are no warrants.
Okay, so there's no warrants. That was my next question. When was your last raise?
Last raise was last summer. It was done, or late last spring, and it was done to raise a little bit of exploration money, really taking advantage. We were the first company in Canada to take advantage of the critical metals flow-through provision. So it was a charity critical metals flow-through. It was done at about a 60% premium to our share price. It was done at, I believe, 60 cents.
Got it. And the group the investors that came into that round, are they the same group that were in previous rounds, or were there new people coming in?
They're a group that was very supportive of us in the past and still are, and so it was very tightly done. In fact, I really didn't want to dilute the company, but by the same token, I didn't want to spend hard dollars for mineral exploration when I could get that kind of a premium. So that's really why we did the underwriting. We had enough cash; we could have done the work without that raise. But again, it just preserves hard capital, which just gives us more options in the future.
What's the company's biggest investment to date?
Actually, money that we've expended, probably our investment in Rockhaven Resources. We've been very supportive of that company for many years. They're developing I think quite a promising, I go so far as to say I'm virtually certain it's going to be a mine, gold, silver prospect a little bit west of Carmacks in central Yukon. It's in the process right now of doing a pre-feasibility. There's a series of announcements in the next little while, drill results, metallurgical updates, and a new resource estimation, which will be done ahead of the announcing the pre-feasibility results.
Do you want to sort of take us back just a little bit there to the news release of January 12th, where there was an announcement of a new formation of a company?
Okay, so our business model, what we do is we acquire mineral prospects, hopefully for staking, and in almost all cases that's the way we do it. So very, very low acquisition costs. Our holding costs are low. And we often acquire them when commodities or the market is out of favor. So we're able to pick up what we think are really good projects at low cost. Then we hold them for a few years, and hopefully the market comes around. So over the years, we've amassed a really nice portfolio of critical metals. And so we were in discussions with the company and ultimately signed an agreement with them. We expect them to either IPO or use some sort of reverse takeover of a pre-existing company to list on. But that deal will give us 1% NSRs in each of the properties that we've vended into it, and will also give us a very large share position in that new company, 19.9% of the shares after they're well funded. So it's I think, a very creative way to do it. Over the years, we've managed to amass a huge number of shares in other companies. So if we get into a bull market for metals, we've got a lot of leverage. We own between 10 and about 35% of about 7 or 8 companies now. When we're building on that, I think we'll do other deals that are similar to that. But we're also keeping an NSR in the projects just to cover off the blue sky as well, beyond what we have with the share appreciation. So it's a little bit different business model than a lot of our peers, but it's partly driven because we're not quite so pressed for cash as some of them are. A lot of them are basically acquire property and have to move it fairly quickly because the holding costs are high, and they need the cash to cover their operating expenses. We've been able to keep ahead of the curve on operating expenses, so we're able to do a little bit more creative bargaining.
How do you approach, the table with a company, sort of deal making, when you're perceiving the value of those assets to be down at that time, and sort of make a fair deal where you kind of maintain a good reputation and
Yep.
Right? How do you? What's your approach?
Well, there's 2 parts to it. First, there's not much point in trying to make deals when the market's against you, and so we haven't been terribly active for the last few years. We've been acquired our assets and held the best of them, waiting for a turn in the market. Now we're seeing that turn, and now we're much more active. We've made a couple announcements, and I think there's more to come here soon. But when you're bargaining with a company, first you want to try and get people who you think are sincere and are it's not a pump and dump. It's not something where that's a flash in the pan that'll leave a lot of people hanging. But the other thing is you've got to make sure that it's a win-win for both companies. So you look for a way to structure the deal that you get a reasonable short-term return, but if the project is successful, then your long-term benefits are much, much greater. And it's always a playoff between that short-term benefit and the long-term, and it's but the key is you have to do, if you want to stay in the business a long time, you have to do deals that make sense. They can't be one-sided transactions that are only a win for one company.
Right. Why don't you flip over to the January 18th news release and maybe explain the casino deposit?
Okay, so the casino deposit is a very large porphyry copper moly deposit in central Yukon. It was found by Archer Catherine Associates, the company that I was with for many, many years back in the 1960s, and then went dormant for many years. It was just too big and too remote for a lot of companies. And Al Archer, one of the former partners of Archer Catherine, and myself convinced Teck, who had owned it at the time, to option it to us in the early 1990s. We put it into a junior, did a lot of work on it. In fact, a lot of the current resources are based on the drilling we did at that time. And over a number of years in different transactions, it was with the Hunter Dickinson Group for a while, and Ross Beatty had it for a while, and ultimately it ended up in Western Copper Holdings, who own it now, and Western Copper and Gold. They have advanced it very nicely to feasibility level, and they're in permitting now. Rio Tinto has recently made a large investment in Western Copper and Gold, and I think they're anticipating that they may become more involved there. We picked up a project about 30 kilometers or 40 kilometers to the south of it that I've been watching for about 20 years, and the claims came open much to my surprise, and that was about 3-4 years ago. And we went in and validated a soil geochem anomaly that we knew was on the property, and surprisingly it was still open. So we did more soil sampling and The next year, we did more soil sampling, and finally, we managed to delineate I think what's probably the extent of the anomaly. It's about 8 kilometers long and a couple of kilometers wide. The core of it is about 4.5 kilometers by 1.5. That's where copper and moly are richest. Outside of that, you get into a zone of base metals and silver. So very classic alteration pattern, or a metal distribution pattern for a porphyry. Almost no outcrop on the property. In fact, I don't know if there's a single real outcrop, but where the geologists have been able to pick up rocks out of the soil, they've been able to identify very strong potassic alteration in some places, sericitic alteration, other. Again, the type of features that you'd expect to see in a porphyry deposit. And the geochem and the alteration zone coincide really nicely with a large magnetic low within the same package of rocks as host Casino. Normally that unit is a magnetic high, it's got magnetite in it, but when you're in close proximity to porphyries, the magnetite is destroyed by sulfidations and you get sulfide minerals replacing it. So we think it's a great target. We did a deal with I think quite an aggressive junior, well-funded. I expect that they'll be in there, probably do an IP survey, which hasn't been done yet, and then go into drilling. I think it's a great prospect.
And what junior was that again that you made that deal with?
Benjamin Hill.
Benjamin Hill.
Yeah, and we've got a number of other porphyries that we've amassed using the knowledge we gained from Casino and other work that we did in that part of Yukon. We've got about 12 porphyry projects, 2 of which are farmed out. One is now with Alpha Copper, the other one with Benjamin Hill, but I think we'll do more deals on some of the others. With this critical metal strategy, copper porphyries are very hot tickets, and I think we've got some really good ones, many of which haven't been drilled, and the drilling that's been done on some of them has been by and large very favorable. I think it's definitely justifies more work. So we anticipate more transactions in the copper porphyry space.
So let's flip over to your most recent news on January 23rd. You want to kind of review that and give a more detailed explanation of that release?
Mount Hinton. Okay, Mount Hinton is a gold silver vein camp. I call it a camp because the property is very large and the veins extend across the entire property. It's directly adjoining the south side of the Keno Hill Silver Camp. It's about 20 kilometers to the south of the Eagle mine of Victoria Gold, and about an equal distance to the east from the Ormac deposit that Banyan is currently defining. So it's in a very active gold and silver district. We've been able to work on the property and build on work that was done by previous owners. There's about 80 known veins now. Most of them are very high grade. They're typically half ounce to multi-ounce gold contents in them. They typically are meter to a couple meters wide. Some are wider, up to 7 meters wide. And we think there's also potential there for bulk tonnage. There's quite a pronounced mag low that never has really been looked at. Most of the veins occur outside of that area, and most of the area of magnetic low is actually covered by either talus or glacial till. So there's potential in there for a bulk tonnage style like Victoria Gold or the Snowline discovery that was made to the east of us. So, but already with even without anything else, the vein camp itself is a really exciting exploration target. It's within easy trucking distance. It's about 4 to 5 kilometers from the Alexco mill, or the former Alexco mill is now Hecla's mill. Keno, it's a 500 ton per day mill, and it's never really operated at capacity. So I think if we're able to define targets in there, or an optionee is able to define targets in there, I think there's a potential ready market for it without even building a mill on the property. So I think it's a great prospect, road accessible. There's placer miners working in there that are finding nuggets that are the size of your thumb there. It's really quite impressive. So, and the probability is that that gold that they're mining is locally sourced. So we think we've got a really good one there.
So clearly this is basically a junior holding company. Would you like how should a new investor define your company? What lens should they look at this company through?
Okay, I like to think of it as a holding company, but very much a growth company. With that large portfolio of properties, we've already got about $38 million for the shares of other companies. We've got, if this critical metals or when this critical metals transaction closes, we'll get more shares, but we'll also really increase our royalty position. We'll have about 23 NSR royalties at that point. So we're edging toward a royalty type situation as well. But again, we've got a lot of other properties we're going to be able to do similar transactions on. And we've got shareholdings in a couple projects that I think are game changers in their own right. One is we own a little over 30% of a private company called Broden Mining. They're working very actively with the Ross River Dene Council, one of the First Nations in Yukon, to redevelop what was once the largest mining camp in Yukon. Very, very large lead zinc deposits on that property. We've got over 30% of the shares of that. If they're successful, and they're really all they're waiting for now is a final signature and an agreement that's with Canada to give them ownership of the property, that's going to be a huge win for us. And one that I think has got even more potential is a project that a company that I founded as a spin-out from Strategic. It's a tech company of a sort, but what they're looking at doing is coming up with a replacement for Portland cement. And you think, wow, what a boring business. Well, the cement business is much bigger than the minerals business worldwide. What they're looking to do is to produce cement out of materials other than limestone. So the result of it is much less CO2 generation. And it can be done on a very cost-effective basis. They've got a lot of patents in place. They've raised over $60 million US from some really well-heeled investors. Breakthrough Energy, Bill Gates' innovative company, Rio Tinto, and the Lennox, the big home builder in the States, are the other big shareholders besides Strategic. I'm very bullish on what they're doing. How did we do it? It came from flying back and forth to one of our mineral projects over top of the old Faro mine site and seeing the huge environmental mess that was left there that Government of Canada is currently working on reclamation on. And two thoughts came out of it. One is there's got to be a lot of ore left in that district, which led to the formation of the Broden concept, where we're working to reacquire the unmined assets in the district. But the other one that came out of it is, how do you treat those tailings in a way that really, truly remediates them for long term, not just put a cover over top of them that hides them away and maybe keeps them from oxidizing for tens of years or hundreds of years, but it's not really going to solve the problem. And out of that, I came up with a chemical concept of how you could react the sulfide in the tailings and form siderite, which is a much more stable mineral. It was an interesting concept. I think it still has some validation, but fortunately a young engineer at UBC who was working with us came up with another observation, which is when you're finished neutralizing the tailings, the sulfide, you're left with a lot of rocky material. What are we going to do with it? And so we did some research and came up with realized that it would be possible to heat it, and again, there's a couple more steps in there, but you basically turn it into cement. And then we thought a little bit more about it and realized that we wouldn't have to use just mined tailings. That would be a good source because it's already mined and ground, but any waste product that's rocky material other than limestone would be appropriate. So things like waste from gravel operations, dredging from river tailings, to keep channelways open. Just about anything will work with that process. So they're working under independent management. They've got a very experienced CEO. He used to run Redlands, a very large construction group in the UK. He sold out their cement business to Lafarge for $2 billion. He's a civil engineering professor So he knows the science behind it as well. So we think that project's in really good hands. And again, we still own about 12% of that company and have some warrants that would increase our position by about another 5%. So we're pretty well positioned in what we think could be a major disruptor in an enormous industry.
So we're getting close to wrapping up here. Would you like to get dropped off at your office, or do you have another location you'd like to go to?
Well, I can go back to the office. That would be great.
Okay. So has that company had any discussions with Lafarge at all?
They haven't. As far as I know, they haven't talked to any of the large producers, and the reason for it is that they're still getting all their patents finalized. They want to get a demonstration plant up and running before I think they really launch in a major way. It's still private. I expect it'll go public at some point here in the not too distant future. So.
And you think that's a scalable company?
I think that company could be massively scalable.
And disruptive.
Massively disruptive, yeah. And again, it has the potential, if it were able to replace all Portland cement production, which is a
bold statement.
Yeah, but if it did, it has the potential to reduce global CO2 output on an annual basis by 4%.
Okay.
That's pretty impressive.
Yes, it is, and a very interesting company. Lots of the companies that you've invested in are pretty interesting. It seems like your company has catalysts that could just come out of anywhere. And again, that's not me trying to sell the company. You have so many different...
We have a lot of irons in the fire.
Yeah. What's the current market cap of the company?
Right now it's about $33 million, and our cash and share positions alone are worth about 42.
That was my next question.
Yeah.
So, a little bit out of favor in the market. Why do you think that is? You think it's
I think the whole sector is out of favor still. I think that will change as the world realizes that there is going to be a massive demand for metals. Copper is a no-brainer. If we're going to electrify the world, we've got to have more copper. But because of all the financial uncertainty and the war in Ukraine, precious metals are currently in favor. There's been no base metal mines of consequence developed for a long time, so things like zinc and some of the other base metals are in shortage. And again, critical metals are the name of the game. If we're going to electrify the world and have batteries, you're going to need nickel and cobalt and maybe vanadium. There's a whole suite of metals that are absolutely going to be in short supply. So I think we're in a really sweet spot going forward. I think the time has come for metals in general, and I think our company really specifically.
Do you have a personal favorite metal?
I don't know.
It's like asking you who's your favorite child.
Yeah, but I think copper. Just because there is so much demand building for copper, and there just aren't the deposits around to satisfy that demand. Western Copper and Gold had a good slide that they showed that theirs is an enormous deposit. It's a couple billion tons, enormous resource of copper in it, and they pointed out that if you look at demand curves going forward, they're going to need to develop about 70 casinos, and there aren't 70 casinos known in the world. So there's going to be a lot of effort put into exploring for copper, or else copper prices are going to really, really go up.
Well, on behalf of my investment community and all of our members and the reach that we have, I'd like to thank you very much. Oh, is that on the camera there? I'd like to thank you very much for doing this interview. There's so many things that we can cover. This could easily go on for an hour, which isn't a bad thing. Yeah. But maybe we can catch up with you and get an update every quarter, or sure. when something's going on with the company, there's a development. And sort of give the community another update. Yep,
that'd be fine. As I said, I think you're going to see quite a bit happening here. I've done, more transactions. I think we have more pending now than we've done in the last 5 years. So it seems to me that things are picking up. So anyway, thank you very, very much.
And what exchanges are you on?
We're on the Venture Exchange in Canada, and it also trades in the U.S., but it's primarily listed on the Venture Exchange.
Okay.
Thank you very much.
Eaton, I really appreciate this interview. Lots for investors to look into here with this company, and like I said, the potential for a lot of different catalysts to pop up at any time.
Absolutely.
Take care.